Good morning, Dornbush download 72. Got it out this time. Andrew, Michael, good morning. A little bit of a better morning, Michael. I know yesterday was our second positive day in about 11 or 12. It's been a shocking start to 2016. Not a lot to be smiling about, frankly.
It has, Andrew. I can't remember a sort of more hectic start to a calendar year than what we've had in the last couple of weeks. And really, yeah, that data from China over that New Year's break has just snowballed into something a little bit sinister, I guess, in the last couple of weeks. But as you say, yeah, certainly nice to see it consolidate a bit. But, you know, the old dead cat bounce scenario sort of is starting to, you know, maybe just sneak into the psyche a bit, and whether it's a short-lived thing, but we'll take it as we can get it at the moment.
And it's an interesting point. You know, we sort of have two sets of clients. We have sort of our more, dare I say it, set and forget. So these are the people that are just looking for a passive income stream, aren't really happy with volatility, but equally so understand that's just part of the game. Others are more proactive, trying to chase capital gain. Dividends are nice, but they're more trading the market. And, you know, your comment around this dead cat bounce, there does seem to be a bit of consensus feeling that if the market can get to around 5,200, 5,300 and led by, you know, BHP or Rio or just decent profit reporting in a couple of weeks' time, you should actually be selling into that rally. Because like you're saying, the Chinese data that's coming out on face value looks okay, but if you sort of drill down into the numbers, some of the numbers in particular, that more manufacturing and exporting focused stuff is not looking too flash at all. So I guess, you know, general advice, but, you know, if you're a trader, maybe a BHP or a Rio or an oil search, you know, like the energy sector's just been absolutely decimated. But you are playing with fire. But again, if you're part of the 80% of Dornbush clients who are just there collecting dividends and all that type of stuff, then now's probably not, and I've got an order I've got to do for a client in a minute. You know, you're buying NAB at a 7.5% fully franked dividend, and we'll talk about NAB in a moment, or you're buying Telstra at 5.5%, 6%. You know, there are a number of good dividend paying shares out there at the moment. NAB, so the range was announced this week.
Yeah, that's right, Andrew. And I guess the clock's starting to tick a bit, I suppose, you know, with the myriad of forms and, of course, the large booklet that investors would have received. Yes, the pricing for the UK listing, anywhere between £1.75 up to £2.35. Which I guess sort of equates back to, say, $3.50 to $5 in Australian dollar terms. They will be listing over there on the 2nd of February, so we will get a sneak peek on the 3rd of February just to see how they go in that previous night over in the UK. So the general consensus is that, yeah, it's probably not going to be an overly strong listing or strong float, but yes, we're starting to see a bit more detail, I guess, as to what these things might actually come out at.
So I guess the call to action points are, if you're a NAB shareholder, and we've spoken about this a few times, but, you know, this is you need to do something time. You've got till the 2nd of February. 3rd of February?
Yes, so voting in by the 25th of January. But yes, basically, if you want to participate in that share sale facility, 3rd of February, I think it is. But yeah, you'd certainly need to action it a few days.
So you hold less than 2,000. Our view is we don't particularly like Clydesdale. We would be using that share sale facility, either use the form or you can just jump online and do it that way. If you hold more than 2,000, we'll have to wait till the 3rd of February. But like we've said many times over the last 4 to 5 weeks, we certainly are not expecting any great interest from Australian investors, and certainly you probably want to be selling them sooner rather than later.
Yeah, absolutely, Andrew. And of course too, if you do participate in that share sale facility, you know, you're not going to get your money back straight away.
Like April, isn't it?
Yeah, 3rd of April is sort of the time I think that they flagged in the booklet.
So no brokerage? happy days, except for Mrs. Doherty and Mrs. Violent. However, shed a tear. However, you are going to have to wait, like you're saying, 6-8 weeks before you get your hands on the money. So you just got to weigh up as to which way to jump. The other one that you mentioned this morning, which is a really good point, was around this whole Woolies Masters thing. Do you want to briefly take people through that?
Yes, certainly. Very, I guess, high profile sort of announcement. Of course, Andrew, Monday it came out and really triggered by the JV partner, Lowe's. They exercised...
Not the menswear company.
Yes. The big US player Lowe's, yes, not the menswear guys. They exercised their put option or their right to sell.
So that had enough. They hit the wall. We've tipped in enough money. Thanks for the memories. We're out of here.
Yeah, exactly right. And based on once them exercising that right to sell, Woolworths then needed to exercise their right to buy. So Woolworths has now taken effectively, logistically full ownership. Dollars are yet to change hands and all of that sort of thing, of course. But that has now left Woolworths with full ownership, the door open to either sell Masters or potentially just wind it up. Still not a lot of detail in that regard, but as we've spoken about in the past, Masters has been bleeding a couple of $100 million a year out of Woolworths now for the last couple of years. The low sale back to them. Yeah, Woolworths, by the look of it. New management on deck, of course, have made the decision, and probably a good decision, really. The outlook for the business was still one of hardship for the next couple of years. So probably sooner rather than later.
So what we're saying is it's a good outcome for Woolies shareholders, and we saw the share price bounce by like 6 or 7% on that news. They've come back a little bit. We now, I guess, from my point of view, we now want to see who the new CEO is. So, like you said, Gordon Cairns, the new chair, has come in. He's sorting out Masters. He's got a new head of Big W. So, I guess the final part of the puzzle is who's the new CEO of Woolworths. So at this stage, anyway, it seems as though they're sort of getting slowly back on track. But, the flip side is Bunnings have just been handed an absolute free kick, and we can talk about Wesfarmers and the UK next week. But here in Australia, they've been handed an absolute free kick, and their Coles supermarkets are doing incredibly well at the moment. So I think if you had a preference, you'd still probably go Wesfarmers. But certainly it would appear as though at this early stage, Woolies are finally starting to get a handle that there is a problem and are taking steps to address it.
Yeah, absolutely, Andrew. And I agree 100%. A bit more devil in the detail to come out, but yeah, this has to be a good thing for
And it won't be a trade sale. I know you're saying that's one of the options, but I was listening to Gordon Cairns interviewed by Ross Greenwood a couple of nights ago, and even though he was trying to talk it up, I mean, if Woolies can't make it work, then it's pretty unlikely that anybody else is going to. They're talking about maybe selling the home hardware to Metcash, but generally speaking, and even here in Toowoomba, there are some concerns that might be one of the sites that may close. 7,000 jobs at risk. It is an issue, but from a shareholder point of view, it ain't working.
Yeah, absolutely.
All right, anything else you want to cover off on?
Yeah, no, I think that's about it, Andrew. Again, pretty tough start to the year. Our reporting season, of course, I guess officially starts next week with GUD Holdings, the traditional first cab off the rank. So next Wednesday, that's going to give us a lot more detail about the state of affairs. Probably expecting it's going to be a bit of a rocky ride, but crossing fingers and toes, hopefully we'll get a few good numbers in.
Absolutely. Until next week.
Thank you.